Good morning, I'm Tony Kaye, I'm the editor of Eureka Report, and I'm joined today by Callum Pickering, our economics commentator. Callum, I just wanted to have a chat about the US election and really what it means for us down here. We're a long way away, but there's a lot of commentary around still about the possible impacts for Australia and investors. So the first thing I just wanted to have a chat about is exactly what we're likely to see from a Trump administration. One of the big things in his policies were around tax cuts and also stimulation measures in terms of huge spending on infrastructure to, quote, make America great again. That's still unfolding, and as we all know, he's not actually in the chair yet until January. But so, in terms of the tax cuts, can you explain a bit about what those tax cuts are likely to do for the US economy?
Yeah, so at the centre of his tax policy is obviously a 20 percentage point tax cut to corporates. Which is expected to stimulate the US economy and certainly had that effect on markets over the latter part of last week. It's been taken quite positively. There's also going to be personal tax cuts, which for the most part are going to accrue to higher income earners. There's going to be less of a benefit there for lower income earners, which again is expected to be somewhat stimulatory for the US economy.
In terms of the infrastructure, as we know, a large part of his success in the election came from those so-called Rust Belt votes, the so-called forgotten people. And he's promised to put billions of dollars into infrastructure spending in all sorts of different areas to get industry going again. So what sort of impact is that likely to have?
So this is a source of great uncertainty for Trump's economic plan. Now, he has promised to deliver an infrastructure package of around $1 trillion over the next 4 years, and he's going to combine that with public-private partnerships, which could mean that the final stimulus actually ends up being sort of $3, $4, even $5 trillion over that period. So this is a significant stimulatory package. Now, there is some uncertainty about whether he'll be able to get that through Congress. Despite the fact that it's a Republican-controlled Congress, historically, the Republicans have been somewhat reluctant to pass these sort of measures. They're all about small government. So while they'll be more than happy to pass tax cuts, they may be somewhat reluctant to pass new spending measures. That said, if we assume that it does go through, it will provide a significant stimulus for the US economy. It's going to create, I imagine, hundreds of thousands of jobs. And the fact that it's infrastructure spending means that there's going to be a productivity dividend down the track, which means that potential growth in the US could be higher than it otherwise would be.
The flow-on effect related to all of the internal focus is also what's going to happen on the international trade arena. And he's spoken about increasing tariffs, particularly from China, to put more pressure on imports. So where do you see all that heading?
Yeah, this is certainly an interesting one. If there's a negative of Trump's economic plan, it's certainly his trade policy. But it's an area that is of critical importance to those who voted for him, those sort of disgruntled workers who have for years seen sort of jobs outsourced to the likes of China and India and other countries. So it's one of those areas where I feel as though he almost has to make good on what he's promised. But certainly the US is quite protectionist in general. Trade isn't necessarily a big share of their economy, but they are globally the world's biggest importer, particularly for countries such as China. So any policy that they go through that increasing tariffs or other protectionist measures is going to have a significant effect on global growth, and certainly would be viewed as an area of great uncertainty for markets over the next few years.
And of course, one of the fears, I suppose, is that Australia is going to get caught up in the crossfire somewhere, particularly if there's friction between the US and China on trade. So what sort of effects are there likely to be for us?
Well, certainly anything that's not great for Chinese growth is not going to be ideal for Australia for a number of years now. Certainly over the past decade, we've relied on a strong Chinese economy to boost our domestic economy, and that's worked out very well for us. But if the the US does go ahead with these sort of protectionist measures, it could potentially hurt external demand for Australian goods and services.
And just moving on to rates, the high expectation that the US Fed is going to hike rates in December. Do you still see that as being on the card?
Well, certainly leading up to the election, I thought that there was a possibility that a Trump win may cause the Federal Reserve to wait a little bit to see what happened with markets and the economy before pulling the trigger. That said, markets have reacted quite well to the news. There was sort of the initial sell-off, but then it all came back fairly quickly. So I expect that the Federal Reserve will go ahead and raise rates when they meet in December. The interesting part about all this, of course, is that the Trump economic plan seems to have caused a sell-off in bonds under the idea that it's going to be a stimulatory measure, it's going to increase inflation, it's going to cause the Federal Reserve to increase rates more quickly than they would have otherwise.
Thanks, Callum. Lots to talk about on the post-US election outcome. We are really looking forward to seeing what happens, I suppose. No one knows, but we'll see what happens over the next few months and beyond. Thanks for coming into the studio today. Look forward to seeing you again.